Okay, well, thank you for joining the video call. Let's just start with questions. Do you guys have any questions before the exam?
Are we gonna have to do a cost of goods sold schedule and a cost of goods manufactured schedule?
I don't remember seeing any schedules in the exams.
Okay, because I thought I was doing pretty good until I hit that stuff, and I was like, oh no.
Yeah. Yeah, I didn't even memorize the schedules honestly when I took the class, and yeah, you don't really have to memorize like the whole list of schedules, so that's good.
Okay.
I see my instructor added that as something to prepare. I don't know.
Your instructor had something to prepare?
Like the schedules.
Oh, like he told you to be prepared for that?
Yeah, that's what she has in a document, a Google document. She prepared for each chapter to say this is what to pay attention to study.
Okay,
I don't
well,
know.
that's good to know.
Yeah.
Yeah, maybe, I don't know, maybe one question would be schedules.
It seems like each professor has a different direction they taking with the exam.
Yeah. Any other questions?
No.
Have you guys seen the video of, there's like a video of one teacher. It says before, like study for the exam.
I don't remember anything.
Yeah, is that on the under the week 4 exam study?
Yeah.
I was going through that just before I came on here.
Okay, good. Because that's a great video. I think he's a campus teacher, and I guess that was like during COVID when they had to do video calls like us, and he did like a review for the exams for every single exam. So they're really, really good before taking the exam. So I prepare questions like those, like similar to his questions. And those questions are like, I'm pretty sure they're going to be in the exam. He just like changed the numbers for the video call. That's it. So we can start with that if you don't have any questions. Okay. So I'm going to read the questions, and then you can take your time and calculate the answer. Then you can chat me like on a private chat the answer of the question, and then we will solve it all together. Okay.
All right.
So the first question is, there's this company and it has predetermined overhead rate of 60%, and the allocation base is direct labor cost. Raw materials are all direct materials. And then we have raw materials purchased, used in production. We have labor, direct labor hours worked. So this is the actual direct labor incurred. So the cost of direct labor, manufacturer overhead incurred. And then we have this for inventory, the ending raw materials, the beginning working process, and the ending working process inventory. So the question is, what is cost of goods manufactured? And then again, you can just write it to me.
Natalia, I have a question. Where did you get that spreadsheet?
I made it.
Oh, right. Okay.
Yeah.
Awesome.
Give me 1 second. I'm going to share my screen again. Okay, there. Okay, for the ones that who just joined the video call, we're trying to solve this question. So you can do it by yourself and then we're gonna do it everyone together. Okay. Now let's try to solve it together. So, give me 1 second. Okay, so cost of goods manufactured is the credit side of work in process. So it's right here. So we need to solve like all the debit side of work in process to find the cost of goods sold. So we start with the beginning. The beginning of work in process is 8,000. And then we can add raw materials. So which number should we use for raw materials?
27,000 because that's what was used in production. Is that it?
Yeah, perfect. So that's what we credit in raw materials and we move it to work in process. Okay. Then direct labor. How can we find direct labor? Actually, we don't need to find it. What number is it?
24,300.
Is
So
it
the
for
24.
Mm-hmm.
Mhm.
So 24,300. And the next one is manufacturing overhead. When you see the word incurred, that means the total or the actual. So this is the actual manufacturing overhead. So this is not the one. We need to use the applied manufacturing overhead. The applied one, we know that the formula is predetermined overhead rate times the actual allocation base. And what is the allocation base?
Direct labor cost.
direct labor cost?
Right, so it's direct labor cost. So we need to multiply that, the predetermined overhead rate, times direct labor cost, 24,300. And then what is predetermined overhead rate?
This says 60%.
Yeah. So we do times 0.60. So let's do that. 0.60 times 24,300 is 14,580. So this is the applied manufacturing overhead. And this is what we're going to use right here. And then the last thing is the ending. What is the ending inventory?
11,500.
Perfect. Okay, so what is the last thing that we need to do to find cost of goods sold? We know that,
We add all of those and then subtract the ending.
yeah, perfect. Because we know that this ending is all of this together minus the credit. So let's just do 8,000. Now I can go to my calculator. Okay, 8,000 plus 27,000 plus 24,300 plus 14,500 minus 11,500. That's 62,300. So that's the answer.
I have a question.
Mhm.
So you mentioned that in the left side, we always have cost of goods manufactured. That's the only thing that's credit in work in process, because that's what is left. It goes to the finished good ones, right?
Right. Yeah.
So while I was studying, I thought, okay, there are two kinds of overhead, and I'm not sure if this is a question that I can ask here, but and
Yeah,
how
it's okay.
can I? So we have incurred or actual manufacturing overhead, and then we have the applied one, which is the estimate, right?
The apply one?
Yes, and we
Yeah.
know that the actual one goes in the right and the left one goes in the left, right?
Mm-hmm. Yeah.
And how would the entries to register both be?
Okay, so that is the T account for manufacturing overhead. So yeah, like what you said, the actual goes in the right, sorry, in the left. And then the applied,
There.
yeah. So this applied one is the same that we use in work in process. So we do the entry just like that, the actual in the debit side, the applied in the right side. If the actual is more, let's say that is 15 and the apply was 10, the difference goes where the one that has the most. So 5 would be here.
And the journal entry to register on both sides. How would it be?
Oh, okay. I know what you're saying. Okay, so you,
Because when I have like indirect labor, I credit manufacturing overhead, I debit manufacturing overhead and credit whatever liability or cash or expense I had.
mhm, yeah.
And that's the actual one. But what about the applied one? That's what I couldn't find out.
Yeah, so you debit work in process because the apply one goes in work in process, like right here. And then you credit manufacturing overhead.
Okay. So the applied one goes to work in process,
Mhm.
and the actual one goes into manufacturing overhead.
Not the actual, but like when you do the entry for this one, it's only like debit of work in process of 14,500 and then credit 14,500 in manufacturing overhead. So you actually don't do an entry for the actual one. That's why you do the like the over apply, under apply with cost of goods sold.
So there is not a journal entry for the actual one.
Right. Yeah.
Oh, okay, thank you.
Okay, you're welcome.
So I have a question, sorry, before we move on. So this like T account for the work in process, what do you have on the credit side?
So this is called cost of goods manufactured.
Okay.
So yeah,
So
it's whatever.
So what is the cost of goods manufactured? That's what you're asking, is what we put on the credit side?
Yeah, that was the question. What is cost of goods manufactured? So that means all the products or jobs that were completed during the period. So they were in work in process, but they were finished. So you credit them in work in process because you take them out of the work in process and then you move them to finished goods.
And so all of those are moved to finished goods?
Yep.
Except the 11,500.
Yeah,
No.
because 11,500 is just like the ending balance. The debit plus, yeah, minus the
You
credits.
add all those, and that is what you send to the finished goods, which is on the credit side, and that's the answer to this question.
Yeah.
Okay, I was wondering where the 11,500 came from, but I see it right here, the working process at the end.
Yeah, so it's the ending.
Okay, all right, thank you.
Yeah, I have
Okay.
a question.
Mhm.
If you were to name all the elements you have on the debit side of work in process in that T account, how would you name them?
Okay, yeah. So the first one is beginning inventory. The second one is direct materials. Then direct labor. And this is manufacturing overhead applied.
Okay.
Okay, any other questions?
And it's always going to be applied that we use for the COGM, correct?
Yeah, that's why it's called, sometimes they give it to you in the question, like the applied the manufacturing overhead applied to work in process. So yeah, it's the only one that we use for work in process.
So
Thank-
I just wanted to verify, the manufacturing overhead, the applied manufacturing overhead that you put. So down at the very bottom, you put 14,580. I just wanted to make sure that is what you put in, right? Because I'm off by like,
Oh yeah, sorry.
no,
So
no, it's fine.
it
I
is
just wanted to double check.
14,580. Yeah.
Okay, thank you.
Yeah, thank you.
I have a
Okay.
I have
Yeah,
a question,
go
sorry.
ahead.
And in the formulas that we got from the tutoring resources, I think I don't understand what means I am inventor. No, I am
Indirect
raw-
material.
in raw materials. Sorry.
Oh, go ahead.
Yeah,
Yeah,
it is in indirect materials.
okay, direct materials. I am. What does that mean?
In
Indirect.
Indirect.
Indirect. Sorry, I just
Yeah.
okay. I couldn't remember. And the thing is, yeah, when I get confused when they are asking. Yeah, I get confused because like between work in process and finished goods, because sometimes, yeah, it is. Sorry, it is, it is.
It's okay. We can maybe do maybe that we should start with that. We should have done it. Start with a review of the T account so we understand them more. So I'm going to open something here.
Yeah, sometimes I believe that I don't understand completely the relation between accounts when they go from we credit them to the other one. Yeah,
Mhm.
that's one. Yeah, that's what.
Yeah. So for these ones that are in production, they follow an order. So we start with raw materials and we finish with cost of goods sold. And these are all like debit T accounts because we add everything in the debit side and we subtract in the credit side. So sometimes they can start with a beginning inventory,
Mhm.
or maybe they can give you the question with like, there's no inventory, so there wouldn't be none. But for this one, we're gonna assume that there is beginning inventory for all of them. What we add to raw materials is all the purchases. So the materials that you buy for that period, let's say that it's a month. Then the materials that you take from raw materials and use them for work in process, those go in the credit side because we're taking them out of the inventory. So work in process is basically production. It's whatever is yeah, it's in process to finish the job or the product. But these raw materials can be direct materials or indirect materials. But the question that we just did, they say that it was just direct materials, but sometimes they can be both. When they're direct materials, they go to direct materials work in process in the debit side. Then we have direct labor and manufacturing overhead, the three manufacturing costs. So the indirect materials go to the manufacturing overhead. Then we have cost of goods manufactured. Once they're completed, so they move to the debit side of finished goods. And whatever is left in work in process is the ending inventory, the same with raw materials. So finished good, if we have a beginning inventory in finished goods, and we also have the cost of goods manufactured, these two together are called cost of goods available for sale. Okay. And then when they get sold, we move them out of finished goods to cost of goods sold. So it's right here, cost of goods sold. But this one is the unadjusted because we haven't adjusted it with the actual manufacturing overhead. So they're right here in the debit side of cost of goods sold. And then while we were talking earlier, there's a separated T account for manufacturing overhead where the actual goes debit side applied to the credit side. And if it is under applied, which means the applied is less than the actual, we add the difference to cost of goods sold. So the unadjusted cost of goods sold plus the difference of the actual and the applied is the adjusted cost of goods sold. If it's over applied, we subtract it. And one way that I like to remember this is seeing the applied like a budget. So and the actual are the actual expenses. So if you budgeted less than what you actually spent, you under budget. And if you under budget, you need to add the difference of the actual to make it even. if you budgeted more than the actual, you over budgeted or over applied it. So you need to subtract the difference to make it even. But yeah, so this is the order, and all the debits are adding things, and the credits are subtracting.
Yes.
Does it make
I-
sense?
Yes, I like how when it says the end, like for example, in raw materials, work in process, like at the end, like that is a subtraction, and thanks to that subtraction, we will have the, for example, here the direct materials and in indirect materials. Is that right?
Mhm. Yeah.
I didn't understand that until right now. Thank you.
Okay. Yeah, no problem.
Yeah, and
Yeah,
it goes according to the formula, because like beginning inventory plus purchases minus ending inventory.
Yeah.
I had a question. Where it says raw materials, it says, is that PUR?
Yeah. Sorry. Purchases.
Okay, thank you.
Yeah. Like when it comes to formulas for these T accounts, I don't like to memorize the formulas. I prefer to memorize this diagram, because then if you ask me what is cost of goods available for sale, then I know, well, it makes sense that is the beginning inventory of finished goods plus cost of goods manufactured. Or cost of goods, if you're doing like the schedule, instead of remembering like every single thing in the list, you know that the schedule of cost of goods manufactured right here, you need to do the beginning inventory and then add all of these 3 manufacturing costs and then subtract the ending inventory to get cost of goods manufactured. So at least for me, I think it's easy like that. Well, not easier.
I think it is easier for me too. Thank you.
Okay, let's go back to the questions right here. So question 2. I can go to question 2. Okay. What are the 3 types of manufacturing overhead? You can just tell me that.
Is it estimated, applied, and actual?
Yeah, that's awesome. I don't know if applied has double P or not. Okay, so the estimated, it's like the budget before the period. And then with the estimated, we can find the predetermined overhead rate. With the predetermined overhead rate and the actual allocation base, we find the applied manufacturing overhead that goes into work in process. And then we have the actual, which the action is right at the end of the period. So this one is before, during the period, and after the period, in that order. Okay. Assume that direct labor is 35% of the conversion cost. Who can tell me what conversion cost is?
Conversion cost is direct material, or no, direct labor and manufacturing overhead.
Yeah, that's awesome. So conversion cost is,
Yeah, that's some
sorry, direct materials or direct labor?
direct labor.
Right, yeah. Thank you, direct labor. So direct labor is 35% of the conversion cost. If manufacturing overhead for the month was 68,400 and direct materials was 23,000, how much was direct labor? This one is more like an algebra question, but it will probably be in the exam. So again, you can just take your time and write the answer to me. I'm gonna share again. Okay. Okay, let's do that now because we only have 30 minutes left. So if we have this formula, CC or conversion cost equals direct labor plus manufacturing overhead, we don't know the total conversion cost and we don't know direct labor. So we can say that conversion cost is 1 CC because conversion cost is like the 100% and only 35% is direct labor and 75% is the manufacturing overhead. So 1 CC equals direct labor and direct labor is 35%. So 0.35 of conversion cost plus 68,400 of manufacturing overhead. So now we can just like solve this formula and have this one being subtracted here. So we have 0.65, right? Yeah.
Yeah.
0.65 CC equals 68,400. And then we just need to divide the 0.65. So 68,400 divided by 0.65. Let's see what that is. Is 105,000 to 30.76.
How did you get 65 CC? Did you?
I do the
subtract
one minus 0.35.
Oh, I see that. Okay. All right. Thank you.
So this is not the final answer because this is just the conversion cost. And they're asking us for direct labor. So now we can use the first formula using this number. So conversion cost is 105 to 30
To go 105, did you multiply 0.65 or?
Divided.
divided. So this equals the direct labor plus manufacturing overhead, which is 68,400. So now we can solve for direct labor. If we subtract both sides, the 68,400, we can get direct labor. So 105 to 30.76 minus 68,400 is 36,830.77.
I think the key
And-
here is to realize that if 35% is the direct labor, then for sure 65% is the manufacturing overhead. Because as soon as we know that manufacturing overhead is 65%, then it's quite easy to calculate for the rest, right?
Yeah,
It took me a while to realize that.
yeah. I mean, this is a hard question because it is complicated because you don't know two things in the formula. Okay, questions so far? Okay, let's go to question number 4. This is just a true or false question. Manufacturing salaries and wages incurred in the factory are period costs, true or false?
False. They're production costs.
Right, yeah, because period costs are all the selling and administrative expenses. So if it was salaries and wages for the administrative people or for like the sales people, then it would be true. But because it's in the factory, they're period product costs. Okay, so this question has 5 questions. At an activity level of 5,000 units, one corporation generates total variable cost of $400,000 and total fixed cost of $160,000. So we need to find at an activity level of 4,800 units, what is total variable cost, total fixed cost, total cost. When it says average variable cost, it's just the variable cost per unit, and the fixed cost per unit. Okay, let's see. Irina, is it okay if you tell us how you do the total variable cost?
Yes. So what I did first was I did number 4 and number 5 because I think those were easy. So the average variable cost per unit. So I got the total variable cost, which was 400,000, and I divided by the number of total units, right? The activity level, which was 5,000. And then I got average variable cost, and I did the same thing for number 5. I got the total fixed cost, 160,000. And then I divided it by 5,000 units.
Okay, so the variable cost per unit is right, but the average fixed cost, no, because the total fixed cost is always the same,
Oh, it doesn't matter.
right? So it is right for the variable.
How do we average it if it's always the same?
So instead of dividing it by 5,000, you divide it by 4,800 for the question.
Okay.
So 160,000 divided by 4,800. So you get 33.33.
So why in number 4 do we divide it by 80 by 5,000 and not 480? Because it's
Okay.
variable.
Yeah, because let's say that there's the variable cost, the fixed cost. If there's the per unit and the total fixed cost is always the same. The variable cost per unit is always the same. So it's going to be 80, no matter if you sell 5,000 units or 4,800 units. What it's going to change is this $400,000 because the total variable cost is different. Oops. And the per unit fixed cost is different too. And the reason is that if we see fixed cost like rent, for example, the total rent is always the same for every month. So if we want to know the per unit, we need to divide that by the units that they're asking us of that month. But if we want to know the total variable cost, the total depends on how many units we're going to sell or we're going to make. So the total variable cost, you have to multiply the per unit times the total. So then, yeah, for the total variable cost, we get 80, which is the per unit, times 4,800 units. And then what is the total fixed cost?
That's gonna be 160,000.
Yeah, because it's always the same, the total. Now the total cost is just these two together. Yeah, that's it.
Taking a print of it.
Do you guys have questions?
Could you repeat how you got the total cost? It's just a sum between variable fixed and fixed.
Yeah, sum of the total variable cost and total fixed cost.
Okay.
And yeah, so this means that this cost is a mixed cost, which is variable, that has variable cost and fixed cost together. Okay,
Can you very quickly just go over the last, like the 4 and 5 again? The difference of when you, yeah, could you just explain 4 and 5 again?
okay. So average variable cost per unit, we divide the 400,000 by 5,000 because this 400,000 is based on 5,000 units. And we want to know the per unit for 4,800 units. So we divide by 5,000 because the per unit of variable cost is always the same. So that is 80. But for the fixed cost, we divide the 160,000 by 4,800 units instead of the 5,000 because the fixed cost total is always the same. So we just need to divide it by 4,800 units because that's what they're asking us.
Is the wording too. It says in line 3, add an activity level of 4,800 units. So at that activity level, what is the average fixed cost? That's something I was just thinking of general, right? Average fixed cost.
Mm-hmm. Yeah. Yeah, it's important to be careful with the units that they give you the information and the units that you need to the numbers that you need to find based on the units that they give you.
And then the total variable cost comes from the average variable cost times, or no?
Yeah.
Times the, okay,
4,800.
okay, thank you.
Okay. So now question 7. This is for a merchandising company. So there is the cost of goods sold. We have beginning inventory and ending inventory. And the question is, what were the purchases for the month? And then again, you can send me the answer in chat. Okay. So there is a formula for this that I added in the Turing resources. It's right here. Cost of goods sold for a merchandising company is beginning merchandise inventory plus purchases minus ending merchandise inventory. You can memorize this formula before the exam and then just solve it to find out what purchases is. Something that you can also do is using a T account. So let's see that this is well, this is not like work in process or anything because this is a merchandising inventory. So let's call it just like a T account of inventory. Then you have the beginning and you have the ending inventory. And then we have cost of goods sold is going to be here. And we're trying to find out the purchases. So beginning inventory is 26,000. Cost of goods sold is 52,000. And the ending inventory is 34,000. So we need to find a number that added with 26,000 and subtracted from 52,000 is $34,000. So
Can I say something?
Mhm.
Well, please finish.
No, I was basically done.
Well, the way I solved it is in a little bit of a different way without the needs of memorizing formulas if we understand what each item means. So what I did is, okay, what I started with, and then I have to add X, the number that I don't know how much so beginning. It's basically the formula, but I always think I was talking to one of our classmates. I always think about cakes, right? When I'm studying. So I'm making cakes, I think, which I don't actually bake, but so what I actually started with, like how many I already had in hand, then how much I bought, cost of goods sold is whatever was left, and then the ending. So I used a quick data go seek formula to find that number.
So you use this one? Or
I didn't can I share my screen for a second?
yep. Okay, you can share now.
So what I did is beginning, so I didn't have this number right here, right? And I know this was 30, oh, ending. So I knew that beginning, so ending equals whatever I had at first plus my purchases minus cost of goods sold already left. But that's not 26. So I went to data, then I went to what if analyses, go seek, and I said, okay, I want to set this cell to value 34, and I want to do that by changing this cell. So then it calculates it, and it gets with the number. I mean, it's the same thing that if you do the algebra, for me, it's much easier because I don't have to go like to trust myself.
Yeah. Yeah, that's awesome. I don't know how to use GoldSig. I'm learning it this semester, so that's new for me. That's really cool. So let's go back to, I can do it. So yeah, we know that the beginning plus the purchases is and subtracted from the cost of goods sold needs to give us the ending inventory of $34,000. So you can do a formula like, well, you can just write it down like the beginning is 52,000 plus X that we don't know minus cost of goods sold of 50. Oops, sorry. Beginning is 26,000. Minus cost of goods sold is 52,000 equals 34,000. So what we can do is we can add this 52,000 in both sides and get the 25,000 plus X equals 34,000 plus 52,000. See what that is.
Plus 25, you don't need the parentheses. because-
Yeah, that's right. So 86,000. And then now we can just subtract this 25,000 in both sides to get the X. So 86,000 minus the 25,000, 61,000. Oh, sorry.
6,000.
Oh, that's why 26,000. So it is 60,000.
Yeah.
So that's the purchases. But yeah, I mean, you can do it in many ways. You can do it like with the T account to make sense for you, or you can just do this formula and use algebra or use GoalSeek on Excel. Okay, now the last question, since it's already 6:30. A cost that differs from one month to another is a differential cost, true or false? What do you guys think? What is a differential cost?
Isn't that the difference between two products or two things you're observing?
Yeah. Or like two alternatives.
Mhm.
So it is false because of that. If it's the difference between two alternatives, it doesn't really mean that it's a cost that differs from one month to another. And now, can someone tell me what a sunk cost is?
Those are costs that already occurred that you can't get back.
Yeah, so we ignore them to make the decision. And the opportunity cost.
Can I say something? I was just using the smart book and there were 2 or 3 questions that I got wrong because sunk cost, we read that they should be ignored. So what kind of decisions, what kind of costs should be used when making a decision? I didn't select sunk cost, but it was wrong. I should have selected it because it said, okay, even though they should be like not considered, they are still important and we have to pay attention to them. So that was something that I got wrong twice or 3 times because they are still important. Are they or not?
Well, that's new for me because I remember that I never selected them. Because if you're going to make a decision, like if you have an old machine that you already bought and you're going to buy a new one, but you have 2 options, then it doesn't really matter what you spent in the old machine.
Yeah. The book said they should be ignored. I'm gonna see if I find this question really quick so I can ask you about that.
Okay, yeah. And what is an opportunity cost?
That's the cost we forfeit by choosing the other alternative.
Mm-hmm. Yeah, well, whatever we're going to give up to select the other alternative. Yeah. So perfect. So remember that I based these questions. I did them based on this video that you can find on modules. And then go to week 4, study exam 1. and it's right here, and it's really great. It's a really good practice. I watch all of these videos, and there were always questions from these videos, and if I wouldn't haven't seen this video, I would have gotten those questions wrong. And okay, well, thank you for joining the video call. And then Irina, if you find the question, you can just send it to me on my email.
Okay. I
Do you
will.
have my email?
I don't. You can send it here.
I have a question, Natalia.
Mhm.
Could you go back to the purchases question?
So like
Yeah, so
this one?
yeah, so the formula you were saying was the cost of good for merchandising company equals the beginning merchandising inventory plus the purchases minus the ending merchandising inventory. And then you just you rewrote that formula to find purchases, and you said it was the beginning inventory plus the purchases minus the ending merchandise inventory equals the cost of goods, right? Because you had that information. Is that how that went?
Yeah,
Okay, so it was 26,000 plus X minus 52,000 equals 34,000.
34,000, right?
All right, that's all I wanted to know. Thank you.
Okay, you're welcome. Okay, so I just wrote my email on the chat.
Thank you.
Okay,
One more
and
question. If you have time, I'm not sure if this is possible.
yeah, this can be the last question.
Okay. So it says, I have a brain here. Fantastic Furnitures makes custom order couches. The material used to make a couch is a blank cost of the customer placing the order. And I know the answer should be direct cost. But why is the material used to make the couch a direct cost of the customer placing the order? The way I saw it is if I'm the customer and I'm buying a couch, I'm not thinking about the material used to buy a couch. For me, my direct cost is the couch with the factory, not the material used to make the couch.
Can
Am I-
you, I think it might be better if you just share the screen.
This one.
Okay, for the next customer, there's couches. Is that direct cost of the customer placing the order?
Of the customer placing the order.
Yeah. Yeah, like for the customers are basically like the same cost that goes to the customers are like basically the same cost that goes to the product. So you can see like the customers like the product.
So if I'm the customer and I buy a couch, so should I think that the material used to buy a couch is a direct cost to me as a customer who buys a couch?
Yeah, because it is a direct cost, is direct material for the product, and whatever goes like the customer buying the product is like making the customer like the product. So any direct material for the product is a direct material for the customer.
Can I chime in here right quick, Natalia?
Mhm.
It's like if you go, if your husband or whoever goes and buys a custom suit, they're charged directly for that material for that suit because it's custom ordered. It's going to be just like that couch. The materials that they put in that couch because you custom ordered it is going to be direct charge to you.
For example,
Does
if
that
I
make sense?
take my car to the shop to get fixed, they're going to charge me for the parts, the direct material, plus the labor, right?
Yeah.
And that
Mhm.
comes like in a paper with different, it's separate. I can see, okay, that's what the parts costed me, and that's what their labor costed me. But for a couch, I just couldn't see it in this way.
Yeah, I think Brandon gave an excellent explanation.
Okay, thank you, Brendan. think that was it. I couldn't find the other one.
Okay, then you can just email it to me. Okay, well, thank you. And I'm going to hopefully do a video call like this before every exam. Okay, and
Thank
have
you.
good luck with the exam.
Will you be posting, there's a couple students asking, are you gonna post this video?
Yeah, I will.
Okay, thank you.
Okay.
Thank
Okay,
you.
see you later. Bye.
Bye.